Now let's turn to the jobs picture, a big story. We do have a roundtable discussion for you this afternoon. Economic editor Michael McKee here now with us here at Bloomberg World Headquarters. Out in Washington, White House reporter Hans Nichols to give us really the Obama administration's take. And we also have with us Ethan Harris. He's a Bloomberg Best economist, head of developed markets economics research over at Merrill Lynch Global Research in New York. Gentlemen, all good to have you here with us. Mike, I want to start with you. Let's talk a little bit about what we're expecting here and the jobs picture. We know it's not a pretty picture.
Yeah, the week's data have been coming in better than expected, but investors and economists aren't going to buy in until we get some sort of confirmation on the jobs front. Today's biggest surprise, of course, the 5.2% increase in pending home sales. That's sales of homes that are in contract but haven't closed. They were forecast to have fallen given the drop-off in demand that we saw after the government's tax credit. And then we got another surprise from the nation's chain store retailers. Sales coming in a little bit better than expected, maybe because of discounting, but it shows the consumer isn't dead. So it raises the whole question of how much life is there in the labor market. And the signals there have been mixed. ADP says we lost 10,000 jobs on the month. And yet the same day we got a report from the ISM Survey's employment index that it hit the highest since 1983, 27 years. So it looks like things are getting better. Productivity was revised down, normally bad for investors, but in this case, maybe companies are getting to the limit of what they can produce with the employees that they have.
Right. Hey, Ethan, let me bring you into this discussion because Mike makes a good point. I mean, when you look at the economic data points, the signals are mixed at this point. You've been bringing down some of your forecasts here for this year and for next year. I mean, when you look at the different data points, is the glass half full or half empty in your view?
Well, I think it's half empty in the sense that we're just not getting the kind of recovery we really want here. I mean, a true recovery means a steady drop in the unemployment rate. So far, the unemployment rate is essentially flat. And if the recent job numbers continue, that is where we're getting private payroll readings of only about 50,000 a month, we're going to see the unemployment rate rise again. And so, you know, it's to me, that's a glass half full. We can't really celebrate this until we see a sustained downward trend in the unemployment rate.
And Mike, I mean, when you look at the numbers, I mean, investors have gotten a little bit more bullish, but the economists really are not in terms of the forecast for the July jobs numbers.
Yeah, interestingly, we've seen the markets go up since we got these better than expected economic data this week, but the forecasts for the employment report have gone down. Yesterday, we were talking about a consensus of 43,000 private sector jobs. That's dropped to 40 this afternoon, and we're looking at 103,000 jobs lost overall. That's because of the census. And as Ethan says, unemployment ticking up, largely probably because the emergency unemployment benefits were extended and people have gone back into that program.
I mean, Ethan, when we get the numbers tomorrow, is it going to be a report that kind of surprises us or takes us by surprise, or is it going to be another report that reminds us that the labor market is still very tough out there?
My guess is we get another soft number, 30,000 in private payrolls. If you look at the main indicators we look at, like jobless claims, ADP report, the surveys like the ISM index, it's really nothing decisive there. Some of them look pretty horrible and some look okay. The real surprise would be if we get a negative private payroll. You know, symbolically, I think that would be a bit disturbing to the markets. Anything in the plus range, the 0 to say 70,000 range, I think the markets will kind of head off to the Labor Day holiday with a number like that.
Well, it would certainly make for a tough Labor Day holiday, potentially, for the president and his team. Hans, you're out there in Washington. Let's bring this into, let's bring the White House kind of into this. I mean, they're in a tough spot right now when it comes to the economic outlook and the jobs picture specifically.
The only thing we know for certain about the number tomorrow is that Christina Romer, the chairwoman of the Council of Economic Advisors, will be giving it. Yesterday she had her going away party. The president didn't stop by there. Tonight she'll have a chance to give that number a little preview, and then the core economic team will have that number beforehand. That will help them craft their arguments, because there's a big internal debate right now in the administration about what you can actually do to improve the jobs picture. Ethan just mentioned 30,000. That's still about a tenth of what Vice President Joe Biden predicted at the beginning of the summer of what would be added every month throughout the summer. So you talk about some of the ideas they're talking about, maybe a payroll tax holiday, some other things, and some tax extenders. There's one proposal that they are coming out firmly in favor for. That's the small business tax credit. It has the $30 billion lending facility. But the calendar, Carol, is working against the White House on all this. Congress is only going to be back for about 2 weeks, 2.5 weeks. They might have to hold hearings on potentially Elizabeth Warren. We know they'll have to have hearings on the OMB director, who will replace Peter Orszag, and they might also have to have another personnel hearing on who will be the next chair of CEA.
Right.
That is, if Austin Goolsbee doesn't get it, he does not need to be confirmed. So very busy, very hard to see how they can have any direct action on the economy between now and November.
Ethan, you agree? I mean, at this point, is there anything really the administration can do, certainly ahead of the elections, that would make an impact on the job market?
No, I think it's too late to have an impact, and I think that until we're past the elections, even some of the more basic stuff, like coming to terms with taxes, is not going to be taken care of. I mean, right now, forget about the new programs. They need to do something to stop the across-the-board tax hikes that we get on January 1st when the Bush tax cuts expire. I think they're going to end up doing this in a very last-minute fashion, and that's going to be very negative for confidence in the economy to see that tax bomb kind of sitting out there several months ahead. So right now we're kind of in gridlock in Washington, and this is not a good time for gridlock.
And Carol, you know, in the minutes from the last Fed meeting that we got, the Fed members all said that they saw the business contacts were telling them that's one reason they aren't hiring, they aren't moving forward, is they're just uncertain of the political climate. They don't know what's going to happen with taxes. They don't know what's going to happen with other policies. And so they're just sitting back and waiting.
Yeah, I mean, Ethan, that's a good point that, you both bring up. I mean, we hear from various corporations, we hear from a lot of observers. I mean, that's the problem that's holding really corporations right now back from doing any kind of aggressive hiring. They just don't know what the outlook is in terms of the regulatory environment or the taxing environment, correct?
Yeah, I think that's right. I mean, you've got just too many uncertainties in the air right now, whether it's regulatory reforms, it's policy uncertainty. And this tax thing, I think, is quickly running to the front of the pack as the main concern. Okay. So it'd be very helpful if they could clear up some of the uncertainties.